All right, welcome to the daily market recap for Wednesday, August 20th. What a volatile day we had with a little gap down, accelerated move to the downside, then a V-shaped recovery. In today's video, we'll be taking a look at the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the market open, you can sign up for the Discord using the link below. All right, going to the indexes first. QQQ, we did have that gap down, a big accelerated move down into the support gaps here, kind of no man's land between the 20 and the 50-day moving average. But eventually, after this was down, I think 1.8% on the low of the day, we had a reversal about 90 minutes into the day and closed really well, only finishing the day down 0.6%. But we still do have a third gap down. We still closed under the 20-day EMA, and we're still seeing incredible volatility. So while this hopefully is the low of that pullback, it's going to be a little bit tough to trade unless you're a day trader. You probably love this environment, but if you're a swing trader and looking for like clean position sized moves, until the volatility kind of tightens up, I don't think we're going to get any clean action. The S&P 500 down 0.3%, undercut the 20-day moving average, came into a support gap created last week, then closed back between the 10 and 20-day. We saw, again, continued strength out of the S&P 500 versus the NASDAQ. The tech-heavy stocks are still a little bit weak, and at least coming into the week, we had very, very heavy positioning on the NASDAQ, basically neutral positioning on the S&P 500. And then for the IWM, which is the Russell 2000, we had very negative positioning. So taking a look at the growth stocks of the IWM, which is IWO, great shake of the 20-day moving average, came into the support gap, bounced and reclaimed that area. Did finish down 0.3%, but I do like the closing range and how we just came back in here. And for now, just put in a higher low overall. ARKK, similar action, gap down, sold off through the 50-day moving average, bounced at the support gap. That's why we draw these zones. They're a secondary spot to watch other than moving averages. And we bounced right from that area, closed right near the high of the day, only down 0.45%. Then taking a look at IBIT to track Bitcoin, finding support right at those previous lows in the pullback. Ideally, we can hold here, push higher, and then put in a higher low. And then we have a nice, like a pretty solid base over the next like 3 to 4 weeks. Jumping to the liquid leaders, let's just sort this by price percent change today. The big story today was FUTU. I have been talking about the China theme, kind of building up, building up pressure. We've already had a couple of Chinese stocks make new highs, TME, FUTU, the two that I'm most focused on. FUTU had earnings today. We gapped up slightly at the open, sold off down to the 20-day moving average and this gap zone, immediately reversed, and then just throughout the day started building higher lows and really accelerated into the close. I think it's up another 1% or so after hours, but extremely strong action out of the leading stock or one of the leading stocks in China, while that base continues to chop sideways and set up. So really nice action there. BE is next. This is a new addition to the leaders list. I added BE, I added Uber, and then I kicked out Meta and I kicked out Palantir. BE undercut and reclaimed that support gap below the 10-day moving average, reclaimed the 10-day, reclaimed the 5-day, very strong close up 3.3%. With that one, ALAB, really nice action. Didn't quite get to the 20-day moving average. Didn't need to. Eventually turned around, closed green on the day, up 0.9%. Ideally, we can reclaim the HVC, test the 5-day, maybe pull back into a higher low, and then we can go from there. NVDA ending the day down just 0.1%. Huge sell-off in the morning, huge reversal in the afternoon. But again, still closing under the 20-day moving average. And this is a lot of volatility. Until we see volatility contract, chances are it's just going to be a very frustrating environment to trade if you're trying to buy and hold for sizable moves instead of buying and holding for a day trade. Like if you saw that the indexes were super extended to the downside. You saw leaders coming into support gaps, key moving averages today after a brutal 2-day sell-off, and you wanted to take a mean reversion trade. You obviously did extremely well and take advantage of that if that's in your trading tool belt. But if you're trying to be like a swing trader or position trader, this volatility needs to tighten before we get some clean moves. SOFI came into that support gap under the 20-day moving average, closed all the way back up into that area. So great reaction there. Obviously, don't want those lows to be violated in any pullback. MP, pretty ordinary pullback into the 20 orderly pullback into the 20-day moving average. Undercut yesterday's low, but then closed above the 20-day, above the support gap there. Um, Pretty interested in that setup tomorrow as well. And then Uber, new addition to the list. Good shakeout under the 5, the 10, into the 20-day moving average. I like to trade Uber on weakness versus strength. I didn't pick up any today, but really nice to see it bounce at this area and close back over the 5-day. We do have this gap down zone from today, so the sooner that we can close above that, the better. Then Robinhood finishing the day down only 2%, gap down, big flush into the support gap, bounced like within a couple pennies of that area, came all the way back up to 105.50. Hopefully, we can get back through the key moving averages, put in a higher low, have that volatility tighten up, and then we can be good to trend higher. And then Reddit, same kind of story. Big sell off in the morning to the 20-day moving average, bounced exactly at that area, closed back kind of in no man's land between the 10 and the 20-day, but really strong closing range compared to the rest of the price action. So, leaders, for the most part, lots of volatility in the morning, lots of selling pressure, but great closes. Now, can we see some follow through, then higher lows, volatility contract, then we can start trading these again. Jumping to the industry ETFs, MSOS, this is a new addition to the list. I kicked out XOP yesterday because I already have XLE. And then MSOS is starting to feel like an emerging trend. So really nice move from 2 up to 5. Now we're just consolidating at the 10-day moving average. Very wide price bars. So if you're sizing this and you're trying to trade it, either trade it on weakness and then manage risk against the low of the shakeout with larger size, or just size it down. But really nice move today, up 8.3%, reclaiming the 5-day moving average. Gold miners had really ugly action yesterday with a gap down and then close under the 5 and the 10-day. Immediately reverse that, and that's what you want to see after like an ugly close is a gap up and strong close the next day, back through the 10, the 5-day moving average, and yesterday's gap down zone. Now gold miners and gold related names look extremely good. A couple other charts I wanted to go over is XBI, biotech ETF. Still have my position in LABU on this. Just pulled back into the 10-day, closed right at the 5-day, and not doing anything wrong on this kind of retest of previous resistance here. XLF financial ETF still looks really good above all the key moving averages. We didn't see that volatility the last couple of days. So if the market does kind of stabilize and then we have another leg higher, taking a look at some financial names is probably the move here. TAN, the solar ETF, continues to tighten right above the 5-day moving average, letting that catch up and in between the resistance gap and support gap here. Really think that this is a theme to focus on. Like if we do get more pullback, shakeout, that kind of action, it's been one of the leading themes off the lows in April. And KWeb flat on the day, bounced to the 10-day moving average. Again, just 3.5-year base setting up. Alibaba has earnings in a couple weeks, so that'll be the main one there. IGV bounced at the support gap under all the key moving averages, right on that undercut. So now let's see if we can follow through to the upside there. And finally, semiconductors undercut the 50-day moving average, rallied back through multiple support gaps, and then closed well in the range today. Again, all these lows that were put in today are great lines in the sand if you wanted to play any reversals. We should not be violating these lows after the type of action that we had today. Jumping into the long setups, we'll just sort this by dollar volume. Tesla was on the watch list coming into the day in case we had a gap up. We didn't. We just had a shakeout of the key moving averages and then closed well, just like many of the stocks in the market. Ideally, here, a little gap up over the 200-day and over the 20-day would be buyable versus the 50-day. That's to keep risk tight. And again, I've gone over this a couple times, but basically a 4-year base. We're starting to see price really contract here. From contraction comes expansion in one direction or the other. If you said, hey, like Tesla was relatively weak, it hasn't really run with the rest of the market, and I think it's going to break to the downside, I would not argue with you. I would say from contraction comes expansion in one direction or the other. As long as you're trading it with tight risk, which you're able to do when we have contraction like this, all power to you. If we do gap down, then that would be shortable versus today's high, and you can play for like a larger move to the downside. MP kind of hinted at this at the leaders list. Looking at two different spots, if we have a weak morning in the market, this tiny sliver of a gap at 65.50 is buyable as like a shakeout under the 20-day. And then stop would be either 1 or 2% or whatever the low of the shakeout is. Otherwise, through today's high, stop at today's low on that one. NBIS, great recovery of the 20-day moving average, the HVC, and then this support gap. Another test of that high volume close from earnings would be buyable versus today's low. SE, today was the buy point on this, and I did not pick it up. Right into the HVC, undercut the 5-day moving average. Nice, strong close. Just watching a retest of that area, if not tomorrow, over the next couple days, letting that 10-day moving average catch up would be a nice risk reward spot. BE talked about this earlier. Great action today. Now just looking for a higher low undercut of the support gap. So still looking at that like 41.40 area, but would want to see market have weakness as we shake out under that area. Wolf, great response today. Maybe today was the day you had to buy it before it rips higher. Um, but either way, good reaction at the 5-day moving average. Closed ending of the day up 5.6%. Just looking for another retest of that HVC from earnings, or not earnings, the announcement, up 60% on the highest volume in at least over a year. I think it's highest volume ever. And not really going anywhere, just sideways chop. A lot of volatility, but we're starting to see that actually tighten up while the market's getting more volatile, which to me is a good sign. But I'm still hesitant to buy anything on strength given how the leaders got whacked yesterday and had tons of volatility today. So we'll be looking for a pullback into 875 there. RKT, I've talked about home builders a lot and how it's been a theme that's working on the right side of its base, has been leading the last couple of weeks. RKT is kind of like tied into that in my mind. Today, we had an uppercut and fail of the resistance gap. Again, I don't want to buy anything on strength in this market. I want to buy on weakness and on a shakeout. So watching the 20-day moving average and gap zone at 17.15 as a possible shake and reclaim as our entry. Stop would be the low of the secondary gap here. FUTU, I wouldn't want to chase anything, but if we get a gap down tomorrow, pulling into the 5-day and then a kind of red to green move as we break into 52-week highs, that would be buyable versus the 10-day moving average to me. I think China's the theme to focus on as we come up to Baba's earnings, and this is the leader in China. SEDG, I put this on the watch list. It might be a little early for this, but I I really want to have some type of solar exposure. And SEDG has had like the biggest move down, does trade very linearly when it moves from a stage 3 to a stage 4 or a stage 1, hopefully to a stage 2. So couple tight days, Friday or Monday, Tuesday, and Wednesday, all above the 5-day moving average while that's catching up. This is one of the only ones that I would look to buy on strength, just kind of through the previous highs here at 32.45. Stop would be the 5-day on that. And then Pony, good shakeout today into the 20-day moving average. Just looking for a gap up, opening range break to buy versus today's low. Overall, this is another higher low in the structure and a stock, Chinese stock that can make some linear moves. Went from $4 up to $20, then based around 11. And now we've got a nice pullback. So we're not trying to buy the extended pivot up here. We can buy versus the low today. On the short side, I have 8 setups. Well, I guess we'll just sort it by price percent change today. DFDV is the first one. This one's already started to leak before the market even got weak. Went from 31 down to $12. This should be a support gap because we had good price action there. Then we bounced up to the 50-day moving average resistance gap, immediately failed there, worked lower. Then we had an inside candle. Now we're just looking for an uppercut and failure of this resistance gap above the 20-day moving average, a little uppercut of 19, and then coming back into this area. That would be the short spot versus the high of the day. UFG, this is one of those like WhatsApp scam stocks. The float is only 2.5 million shares and it traded 6 million on July 17th. From there, you could see just wash sailing up, lots of volatility. With these like OST or recent ones, sorry, like OST, you see big volume to acquire all the shares, then they just wedge it up. It can go for a long time though, so you can't have a very large size on this or anything like that. But eventually they do fall like 93% and then came all the way back. What's the other ones? The PTHL acquired a bunch of shares, wedged it up, just wash sailing constantly. Then from 31 down to now it's 60-cent stock. Um, what was the other one? PCLA, I think. So we've got a theme of these where it's just wash sail up and then completely fall apart on the downside. But you can't put a ton of position size on it. It's more of just like a asymmetrical trade to the downside, kind of like an option. Next, GEV, good little bounce here, but overall just needs more time. I really think that this is going to pull back into the 50-day, and I would love to own it after a little 50-day test, put in a higher low, build out the right side of the base, and then we can start trending again. But this is just basically gone straight up, and now we've lost the 20-day. Good shake today, but we'll just look for a rally back into the 20-day and this gap zone at 626 as a potential short for 2 or 3% there. Roblox continues to fail right at this resistance gap in the 5-day moving average. Quick uppercut to the 20-day would be a spot to watch. Uppercut and fail there would be the entry. The stop would be the high of the resistance gap. Or if we gap down and then lose today's low, lose the 50-day, you could short it on weakness as well. I have two quantum names, IO and Q. We already saw like 2 days washing down here. Now I want to see a rally back up into like the 10-day, or at least like 39.30, kind of where these lows came in, and then look for weakness to short that versus this kind of kill bars high. QUBT finished the day down 1.6%, but still did have a nice undercut of this area. Another spot I would watch is just a rally into the 20-day EMA and the resistance gap here at $16 as a potential short versus the high of that rally, like 16.30. So really tight risk if you're playing on uppercut and failures. We have ZEPP. Speaking of uppercut and failures, got that today. Uppercut the resistance gap high by a couple cents, maybe a dollar or so. Then immediately reversed, got tight, lost the VWAP, and then closed near the low of the day. This is a stock that's already run from $2 up to $44. So now that we're starting to see some friction here, doesn't mean that the trend's over. If we get a gap up, this is only a name that I would want to short on weakness, not on strength. So even though it did uppercut and fail here, I wasn't willing to short it at this area because it has the ability to make these very massive momentum moves to the upside. But this is giving me some evidence that they brought it up to new highs. It was ready to break out like it has in the past, but it didn't have that momentum this time. So now we have that reversal at that spot. Let's see if we can follow through to the downside. So through today's low or a gap up, green to red move, loss of VWAP, something like that versus tomorrow's high is the short spot. Then finally, Palantir, awesome reaction to the gap zone. Like 2 days down I guess let's measure it. So from the close 2 days ago to the low, 18% in 2 trading days. If you were short, you had plenty of opportunities to cover into that move, especially when you got an immediate reaction at the support gap zone. Like that's your spot to cover. And if you're trying to trade for a mean reversion trade, there you go. You have like an extended move to the downside, multiple day, shaking out all the key moving averages, and then get to the support gap. Immediately you turn there. That would have been a nice mean reversion trade. But with all this volatility, I still assume there's going to be more volatility. Would just look for a rally up to like the 5 day moving average. This might take a couple days, like a couple day rally into the 5 day, into the 20 day, and then look for a loss of VWAP, a green to red move, and then taking out the day's lows as key spots to watch to short. And then the stop, I would keep it at the 20 day moving average or whatever 3% is. Because, I mean, we saw today, this has the ability to make these snapback moves. I fully believe this could rally all the way back up to the 20 day moving average before having trouble. So be patient trying to short this because there's a lot of volatility. It's already made the quick move down. Let it snap back, then feel heavy and roll over before shorting. So that's going to be the daily market recap for Wednesday, August 20th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And once again, if you want my market commentary throughout the trading day, along with the live stream at the open, you can sign up for the Discord using the link below. Have a great rest of your night, and I'll see you guys in tomorrow's video.